Welcome guys, my name is Javier Fonseca. I am a financial coach and I'm so excited today because today we're going to be going through something I love helping my clients achieve, and that's minimizing tax. And I'm going to be showing you how we use Darwin and Pareto and the most important things you can learn in the next 30 days, things you can action today. But before we get started, just a little general disclaimer. I don't know your situation, so I've done this with the intention that you can learn something from it, but you should get your own independent advice because this is general information only. But let's get started, guys. So I'm so excited because one of the things that we teach our clients to do is to really evolve their finances. And this really comes from Darwin theory. And, I had my big aha moment years ago when, I looked at my clients and I go, you're running your finances like you were in your 20s. And in your 20s, you definitely needed agility, just like back in the, ancient times when, we were being hunted by other animals. We needed to be agile, but we probably didn't have that many responsibilities and we didn't need that lateral thinking as much because it was very much worked on the hustle and trying to get more income and, saving money and all those sort of things. But as you get into your 30s and 40s, things change. You've probably got a family, you've got a partner, you've got different priorities, or you've got different things that are important to you now. And that means that your finances need to evolve, and so do your strategies. And one of the important pillars that need to evolve is you need to get a mission blueprint and battle tactics and really get the right tax structure. Because if you're here now listening to this, you're likely sick of losing so much money to tax, and you really want to know what you can do to maximize your money, because you don't want to leave things too late and you want to have enough money for the back end when your kids have left home. And ultimately, if you're a parent or you want to have kids, one of the things that's going to be important to you is you really want to be able to set your kids' future up. And for some people, that means being able to give them a deposit for the first home or even just buying a car. But in order to do that, you need to know where to start. And a lot of questions that I get from my clients, especially business owners, is they're really clear on what they want to achieve, but they really don't know what the next best step is. And really, for me, the very first place you need to start is your mission blueprint. And because the mission blueprint is going to do two key things, and they're so critical. This is the heart and guts of your finances, guys. You have to do this. And I'm going to be doing something in a second that, it's out of a kindness because I really like helping people out financially. But getting a mission blueprint means you're going to know your absolute financial must, your financial outcomes, the things that totally drive you and fill your life with joy and happiness if you achieve them. And you're going to combine that with a results-based action. And together, those two things are going to give you success, but they're going to give you an immense amount of fire to achieve your goals. And the things why I'm so excited about this is because I've developed a mission blueprint that I give to my clients, and I'm going to give it to you for a free download because I'm doing this not because I want to get you as a client now. I know that if I do a goodwill for you today, down the track, you're going to remember that and you're going to be really thankful, and you might need our services and you're going to come to see us. Because I know for us, whenever we see a client, the first question I ask is, what is the end result? And so many people, when they're running their finances, they're still stuck on that 20-year-old or early 30-year mentality, and they focus so much on the strategy and they forget about the end result. And for us, we're not really focused on buying 10, 20 properties or having shares. That, for me, that's not the outcome. The outcome is, if you achieve that, what would that help you achieve? And for a lot of our clients, they want the sense of having no worries because they're going to be debt-free, or having the freedom to rock up to work in 15 years' time, and because they love it and they have absolutely joy and passion, but they know that they could stop work tomorrow because they've got a passive income of $1,000 a week, or they've been able to take the kids on holidays to the US in the next year, or they've got a house deposit for the kids to set them up. They're the sort of things that for most clients, for most people, and I know as a parent, they fill you up with joy. And the mission blueprint really helps you get the crux of that. But I'm going to give you a 30-day action results-driven plan inside that blueprint so you can start working on those ultimate outcomes. And what I'm going to teach you now is the tactics, because we're going to go to Pareto. So I love maths, and Pareto is a huge, if you know Pareto, he's a Greek statistician. Sorry, I can't pronounce the word too well, but he developed a concept where he ended up finding out that in life, there are a few actions, and he calls it the 20% rule, where 20% of your actions will cause 80% of your results. And we've been able to refine that way more for clients. And in fact, most of our clients, they are 1 to 3 tactics away from achieving 80% of their goals. That means you're 1 to 3 strategies away from achieving the life you want. And the blueprint is going to be the first action to help you get there. And that's why I'm doing this, because I want to have my mission in my life, just so you know, so you can understand why, because everything flows down from my blueprint, is I want to be able to help thousands of families out to build success and set the kids up and enjoy life along the way. Because I had it tough when I grew up, and I devoted all my energy when I was in my 20s to learning everything I could about money, everything I could about tactics, about improving your finances. And what I've been able to develop for clients is a really refined money system that helps them do that. So the second thing that you want to be doing, and please, if you have time, download the money blueprint. It is so valuable for you. But I want to talk to you now about the right structure. Because when we're talking about minimizing tax and evolving your finances, we need to get out of the evolution that you need to own everything in your name. There are so many people that I meet that they set out to buy all these investment properties. And actually I had a client recently. She contacted me because her accountant hadn't told her about land tax, and she had been buying all these investment properties, and she got hit with a massive land tax bill. And you know, she didn't understand it. And I told her, I said, you know, it's not your accountant's fault. The way they work is when they do your tax return, they're doing last year's tax return today. And we're in like the middle of the year at the moment. So how is that helping you out? You know, when you're sitting down with your finances and you've got your mission blueprint, the mission blueprint is all future forward thinking. What are the ultimate outcomes that I want to achieve in the next, you know, X amount of years? And what are the actions that I have to do this next 30 days or this next 90 days to help me get there? That's a mission blueprint. And when I talk about with finances with clients, I go, I can't change the past. You know, if you're focused on what you did last year, it's too late for me. I don't have a time machine. You know, my focus is on changing your future to help you build success. And to do that, you need to look forward. And that involves getting the right structure. Because if you get the right structure, it can mean from going from the 47 top marginal tax rate, which is really giving half of your money away to tax, to hitting the honeypot and, you know, potentially having no tax. But how do you do that? So I'm going to go through, there's lots of ways. I'm going to go through one, and it's what I call the investment bonds. This is not a new strategy. This has been around for quite a while, but so many people have forgotten about it. And what it means to have an investment bond is they're very similar to super. So you can have shares, fixed interest, cash, you know, all those property, all that sort of stuff. But the things that it's different is you can sell this investment at any time. So, or this asset, because it's an asset structure, I guess I should call it. You can sell those investments in that asset structure at any time and withdraw the money. But if you hold on to that investment for 10 years, and you sell it after 10 years. So let's say you're trying to save up for your kids' education or your kids' first car deposit or a first house deposit. If you put the money in there and you hold it for 10 years, because, you know, in 10 years' time, they're going to hit 18, and you sell that asset, it's going to be tax-free. There is no capital gains tax you will pay. And my job today is not to make you an expert, but to give you light and to shine all the opportunities that you're missing out on. Because the number of times that I sit down with 30 to 40-year-old business owners that are just wasting money because they simply didn't know. And they thought their accountant was doing it, but they weren't asking those questions about, okay, this is my mission, this is what I want to be doing, what is the best way of structuring my money? And just so you know, there are other way more exciting strategies than that, especially around the self-managed super fund or accumulation with pension phase. I won't go into that now, but there are so many strategies available, guys. Like I said, my job today is just really to shine the light on all the things you could be doing to really be hitting the honeypot. The honeypot is really what we want clients to be hitting long term. So let's have a look at how we can start using all these principles and start using what I call that Pareto rule. And what I want to teach you now is some basics around tax, because a lot of people have this misconstrued notion of what tax is. But in simple words, the way I look at it, if I want to go buy a hamburger, it might cost me $10. But in order for me to buy that hamburger, if I'm earning over $100,000, I got to earn $16.39, lose or give $6 to the tax man to be able to have $10 left for that burger. So in other words, the real cost of that burger is I have to hustle 16 to earn $16 to buy that burger. And so when you're looking at things, especially with debt repayments, you really got to look at the pre-tax cost. What is the amount of money you got to lose to tax to then be able to have that money pay off debt? And I'm a big believer in, making the best use of your money. But one of the biggest lies the banks have told you is that there is good debt. And that is the biggest lie. There is no good debt. Don't believe that lie from the banks. But there is what I call tax deductible debt. And the truth is, I guess, where you want to evolve, and this is what we love to teach our clients and coach them and keep them accountable on this, is you need to evolve your finances. If you're in your 30s and your 40s, it's time for hit evolution, guys. You need to start building passive income whilst simultaneously paying your debts off. Now, this is a massive evolution because I see so many clients where they don't do either of them. They're either not paying the debts off or they are paying debts off, but they're not building passive income. And if you can't learn to do both, you're not ever going to evolve your finances and you're going to be stuck in the dark ages or the stone age. And it is time to evolve, guys. And I'm going to go through what I call a passive income debt evolution. This is massive. This is a tactical battle plan for your finances. And the beauty about this strategy, I know it looks a little bit complex on this, so I'll try to explain it in very simple words. If you can imagine you owning the business or you having assets that appreciate in value and they give you an income, your focus should be on doing this. It should be first on paying the non-tax deductible debt off, like your credit cards and your home loan, and really trying to get the best interest for that. The home loan normally represents the best interest rates. And that's why I keep telling clients, if you're paying an interest, that's not good debt. You're still losing money. And our focus should be paying on that. But we need to be building that income, because otherwise, how are you going to achieve financial freedom if you've got no income? You can't eat the walls on your home or and the carpet definitely wouldn't give you a very nice taste. And that's why sweat equity is great, but unless you're earning a passive income, it's useless. And this is what you've got to evolve your finances from, is you've got to get away from the notion that it's all about paying debts off. It's not. The end goal is for you to build enough passive income so you can have the freedom to spend money when you want to, on what you want. And if you want to stop work tomorrow for 6 months and go to Fiji, or to go to Europe and live in France, or take whatever you want to, you have that freedom. And in order to do that, you need to learn this method. And this involves doing two principles. We're basically, to keep things very simply, the amount of money that we pay off debts of the home loan and that is not tax deductible, we now create a redraw account. It's completely separate, like a separate account number that's tax deductible, and we can use that money to build appreciating assets. Like, it could be investment properties for some people, other people it might be some other assets, or it could be working capital for the business. But the big important factor in this, when you're doing this, is we're working to do two things over time. We're increasing tax deductions over time, and we're also increasing appreciating assets that have the potential to pay you more passive income, which we then use to pay off more tax deductible debt. Once you clear that non-tax deductible debt off, then we'll pay off your tax deductible debt, because even though it might be a tax deduction, you're still losing money on it. If the bank's charging you on interest, it's still money lost. There is no good debt, guys. Don't believe that lie the banks sell you. But this will accelerate the way you pay your debts off. The fourth evolution, and this is massive for a lot of people. I see so many clients that don't do this. There is so much literature out there that encourages people to do this. And I guess if you're in your 30s and your 40s, you really need to be thinking about that mission blueprint and how can this play for you. So, but a big fourth evolution is building passive income with tax deductions. And let me give you an example. So on the left-hand side, let's take the example of someone earning 100 grand. So let's say they get a 10 grand bonus. They're going to lose about $3,900 for that to tax. So they'll have 6 grand left in the bank account to do what they want to with it. Now, if we can convert that into accumulating funds for super or self-managed super fund and claim that as a tax deduction, yes, we'll still pay a little bit of tax, but it won't be the 39%, it'll be the 15%, which means your accumulation account will land with 8.5 grand. That's like a $2,400 improvement or 24% improvement. And what I like to teach my clients is those 1 to 4 things that will make massive differences over time. And some things like this is so important for your finances. And if you're considering doing this, you got to remember that with super, the earliest date that you can, if you're in your 30s, there's a date when you can draw super out, and at the moment that's age 60. All the changes that we've had in super, they've never talked about changing that date. What they have changed is when they'll pay you the Social Security age pension, which I'm a big believer. I'm in my 30s. I don't believe that when I get to age 67, and they might make it age 70 by then when I'm eligible for the age pension, I don't believe that I will be eligible for the age pension the way it is now. I don't think my generation will have that luxury because there'll be so many people that will be retired that it'd be really difficult. So I think the rules around that will change. So I'm not planning to build my personal finances on the reliance of that age pension. I want to be independent. I want to be successful enough to not have to rely on that. And I want my clients to have the same freedom to do that. And that's why I'm a big believer that, yes, if you're eligible for that now, go for it. But, for 30 and 40-year-old people like me, I want you to have the freedom to not have to rely on those sort of things. So, look, I've dumped an immense amount of knowledge in a very short amount of space, but I wanted to give you 4 massive like I said, the Pareto rule. These are 1 to 4 action items, tactical battle plans that you can be doing with your finances that could possibly transform your situation in the long term. But the important thing is you got to get started. If you haven't downloaded that money blueprint, download it today. You're going to have to, you'll enter your name, email, and mobile number, and we'll email it to you. But it's just so valuable to have that blueprint down on paper and have a mission plan on what you've got to be doing. Guys, I can't stress out how valuable that is. You need to be doing it. And, if you've got other business owners that or other people who are in their 30s and their 40s who need to listen to this, feel welcome to share this with them. I love educating people. I love coaching people. This is my passion. This is what I love to do. And, sometimes in your life, you have to take a helicopter view of your finances. And I'm telling you now, if you're earning a good income and you have no idea where your money is going and you're sick of paying money to tax, it's time to take action. Hope this has been valuable to you. I absolutely love making it for you. And I hope to see you again in the future. Thanks, guys. Bye.